Stocks struggling for direction today. The Russell 2000, notable move lower, more than 1% ahead of a busy week of earnings and the Fed decision. Let's bring in our market panel. Truist Wealth co-CIO Keith Lerner and Kestra Investment Management CIO Kara Murphy. Welcome to both of you. Keith, what do you make of this? I mean, how do you feel the earnings this week might set us up to know what to expect from here?
Yeah, well, great to be with you. It is a crucial week. I mean, not only earnings, we got the FOMC meeting, and then we got the payroll report at the end of the week. So it is a crucial week. And also, talk about big cap tech. We got 4 of the Mag 7. Now, what's interesting right now, we downgraded technology at the end of June, thinking it got stretched too far. And that's why last week, when we had some earnings, they weren't that bad, but expectations were too high. We've reset expectations a bit going into this. We've seen some of the Mag stocks that are reporting this week, down about 10%. So I think it's, I think more likely we'll likely get some type of bounce. But Jonathan, I also think that more likely that we will see people sell into that bounce because of what just happened the last 2 weeks. They were caught off sides. So any bounce that we see, I think we're going to see some selling into it on a short-term basis, even though I still think tech is a good place longer term. Just short-term, we're not ready to upgrade it as of yet.
I do want to mention Lattice earnings, Chesapeake earnings, both out. Lattice is down, initial move quite a bit, about 8% at the moment. Chesapeake also lower by about 2%, which doesn't look so bad by comparison. Kara, how much are interest rates, yields affecting what we see happening in stocks?
I think that's a huge part of the whole story. Over the last 18 months, we have names like the Mag 7 that have done incredibly well. And that's in an environment where growth has been a little bit more starved. There's been more concern with higher interest rates, but it's also been driven by really strong earnings, which is part of the reason why this week is so important as we hear more about earnings. But going forward, as you look to some of the names that have lagged over the last 18 months, these are names that tend to be more highly levered, that have not yet seen the uptick in growth. So with a little kicker from the Fed, a little bit lower interest rates, that starts to really change the earnings trajectory. And combine that with an environment where you have smaller names, value names that are at historic differentials in terms of valuations relative to some of the winners in the market. I think that really sets up for a longer term trend where some of the names that didn't do well over the last 18 months can do well in the future.
Okay, we've got Sprouts earnings out as well. So we're going through all these reports as we get them. We'll bring you those headlines momentarily. You can see shares of Sprouts are popping. In the meantime, Keith, the fact that you downgraded tech, you're not ready to upgrade again. What would it take, A, and B, what do you like right now then?
Yeah, no, it's a fair question. What we're thinking as a base case is probably just some time to digest. When we downgraded tech at the end of June, the 2-month outperformance of the S&P was the greatest since 2002. So the rubber band got too stretched. We've seen that rubber band come back in. So we just want to see earnings reconfirm the trend. We look at relative price momentum as well. And I just think it's a little bit of time. I think, later in the fall, I think money will come back in here because I think it is still the secular story. I mean, in the interim, we have been thinking that the small cap trade and the equal weight has longer to go because just like tech was stretched this way, the rubber band was stretched the other way for small caps and equal weight. And the momentum that we've seen more recently is historic. Typically, we see more gains, but I think that's more of a maybe 1 to 3 month story before we rotate back into tech later this year.